What's good, y'all? It's your boy Reek Got Options. Thank you for joining RG on another episode of Sunday Stocks. Like I always say, whether the market's up or down, we see green. And right now, we're seeing a lot of green because majority of stocks, especially these ETFs, are at all-time highs right now. SPY, triple Qs are just killing the game right now. Google's running all the way up. Apple is lagging. Apple is definitely lagging. You got NVIDIA, AMD, Micron, semiconductors are up running right now, right? And when you see stocks at all-time highs, a lot of people are like, "Oh my God, it's time to sell. You want to sell high, ha, 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 whatever, whatever." At this point in time, don't do that. You're trying to catch the top, right? It's the same as you trying to catch the bottom when the market's falling. That's a falling knife. You don't want to do that. And right now, we don't have a falling knife because they're not going down. We have nothing but blue skies ahead. So you can blink your eyes. You can see SPX at 6,200, 6,300 real quick, fast, and hurry because not only are we at all-time highs right now, the market is going into the most bullish month of the summer. Yes, that's right. We are going into July. I already said last month that June was going to be bullish and July is going to emulate that. It's going to be the same or if not better. All right. Now we're looking at it and we're over here. We see S&P 500, US 500 right here. Futures, they're up right now and they're pumping. You feel me? This is where we at right now. Then you look and you see the VIX is down. The VIX is finally under the 200 EMA. Once we got under 20 EMA last Tuesday, we just started dropping. You can use this 20 EMA for any chart, whether it's on the 5-minute time frame or the daily time frame. You want to use the 20 EMA as your support and resistance. It's one of the strongest supports and resistance. That's what you want to look at. And once you get under here, it's curtains, especially with the 9 EMA crossing the 21 EMA. Yeah, it's going to fall, and we can keep dropping all the way down to 1487. That's where the bottom could be, and then that's probably where we get a pullback on SPY slightly. I don't see that happening anytime soon, though. Well, I see the drop coming, but the pullback, I don't see that happening anytime soon. And if we do get a pullback, it's going to be a little minor. Then we're going to just keep ripping up until we get a real big catalyst. We have non-farm payrolls, not this Friday, but next Friday. So what you want to look at right now, if you're looking at the stock market, if you're charting, if you're trading, if you're doing anything, what you want to look at is don't really worry too much about the all-time highs. You want to set up and look for the long term. So this is what you need to do. You need to find a ticker that you like, right? And then you need to go to the weekly or the monthly and see what they got going on. So let's go to SMCI real quick, right? I have all this right here on SMCI because I was day trading it, and this is what we do. But I'm going to clear all this out for you guys so you can see how we going to maneuver when it comes to charting for the long term. Looking at the daily, that's my alert right there. Delete that. I'm going to put that back on there tomorrow. Looking at the daily, we broke out. We were in this 200 EMA range. We were just sitting here bouncing off the 21 EMA, and the 9 EMA stayed above this. We were here from May all the way to June. End of June, we got a nice breakout, right? And that's a bullish reversal right there. I believe this is called 3 white soldiers. We had a nice little pullback right here. Did not get the flush. Now, if we break under 46, that's when you feel like, okay, we're going to pull back to the 9 EMA, 21 EMA, so on and so forth. I don't see that happening. What I see, right? You need to trade with foresight, not hindsight. We topped out right here around May 16th on Friday, right? We start getting toppy right here Friday, June 27th. Now we break out of this high and we get over a 38% retracement level. Go to the 50, 66, 618 range. We could have SMCI squeeze crazy. So we're going to zoom out. When in doubt, zoom out. So we go to a higher time frame. Now we're at a higher time frame. We came all the way down. You can say there's a descending wedge right here. Boom. Came all the way down, sat here at 20 EMA, broke back out, rejected the 50% retracement level, came back down, and now what do we have right here? A nice bull flag. All right, you got your flagpole right here. This big bullish engulfing candle. You can go to the top of the wick, bang. Come down here to this level right here, and then draw another trend line. Bull flag breakout on the weekly. Then catch it right here. Caught the pullback right here, the 9 EMA. Over 51, we're squeezing. Long terms, right at the money. $47 calls, 2 months out. Or $50 calls, 2 months out. Catch the pullback on Monday, boom, it rockets out, it goes crazy. Right? We want to look at something else. Let's look at Apple being a lagger. We're going to go to chart school right now. This is what this This call going to be about, well, it's not a Zoom call. We had the Zoom call at 9. Sorry I'm late. We're going to be dropping that soon. The link's going to be here. I'm all over the place. I just got back from vacation, but I'm excited for you guys to make money this week. We're going to look at Apple. We're on the weekly with Apple, right? And we have this bear flag right here. We have this bear flag, nice wedge. We're going to just draw this up right here. We can come from right here, this candlestick, boom. You don't ever force these. Don't ever force none of these. All right. Apple needs to break out 204, 205. I said Apple's on the do not trade list until it gets over 205. All right. We break under 197. Apple's going to drop, come back down to 200 EMA. Mind you, we're on the weekly right now. Apple, it breaks above 205. We get around 206 area, gets to the 66618 range, and we start getting that curl straight up like this with his 9 EMA curling up. Then we can run. All right. We need to break out this wedge. Apple could definitely squeeze, and it's one of the bullish months for Apple. It's just, for me, it's on the do not trade list until above 205 because look at this chop right here. You're getting blended up, right? And on the monthly, it's not looking like everything else. We finally got a doji right here on the monthly, so that's good. Finally got a nice little doji right here on the monthly. That's cool. Apple would definitely see 215 in July. You can definitely see 215 in July. Now, if we want to go to the monthly on SPY, this is what we got right here. Look at this bullish reversal. Morningstar doji came down all the way in April. Tariff news, all that, cooked this. Boom, we start running up. Mind you, tariffs are unpaused on July 9th, so we're going to see if that really affects the market. And then after tariffs are unpaused, we have non-foreign payrolls on July 11th. So it's a lot going on next week. What you want to look at too? Google pumping. Same reversal play. This month going crazy. If Google wants to get through 182, then all the way up to 200, it can shoot all the way back up there and try to get to all-time highs, February highs right there. This is how we're charting things up. We're looking for the long term right now. ETFs are at all-time highs. Triple Q, SPY, IWM is trying to get back up there, trying to do what it do. All right? But SPY, we're already there, all-time highs. Triple Qs, we're already there, all-time highs and breaking out. So we have blue skies right now because triple Qs, before you know, it could be at 600. Are we going to see that this year? I'll bet my bottom dollar that we get to 600 by January. December 20th, we could be around this area. In January, start selling off. All right, we can get a nice little pullback in August, but it's going to just be this, the pullback is going to be like a rubber band, a slingshot, just to send us where we need to go. All right. Back to looking for long terms. Look at this. All these are bullish reversals right here. If anything, we get a pullback. Yes, we can come down to 23% retracement level right here. But other than that, I do not see anything selling off the face of the earth. I just believe that all these tickers are going to the all-time highs. You just got to chart them up the right way. I'm not always right, but I'll never steer you wrong. Look at how we're breaking out on the weekly right here. The 9 EMA just curved, and it just broke through the 21 EMA. So now we have all the smaller EMAs above the larger ones, and that's just a recipe for success. And look where we got the rejection at, the 50% retracement level up here. If you don't understand my levels or see them, I have them all color-coded. If you want to know how to get these levels, just click on the fibs, or whether you go over here to your Fibonacci retracements, or you just click on the settings right here, and then boom, right here, style. This is all my Fibonacci retracement levels, and I have them all color-coded just so I know where I'm at when I'm charting intraday or I'm charting on the monthly or any other small time frame. These are my multi-year Fibonacci retracements because I went from 2025 wow, crazy, 2025 high to 2023 low. I like to get at least 2 years worth of data. You could do a high point, a low point from a longer time frame if you want. That's just what I have. Micron. This is a scary weekly candle right here. This is an evening star doji right here. You don't like this. We rejected the 66618 range, stayed at the 50% retracement level. If we start to break back out above 25 this week, then yes, we could retest 130, 129, 130, and then break out to the highs around 132, 135, 140 area, because that's what it gave us after earnings. But they usually just sell off for a couple of days after earnings. So the 66618 range I had right here, you see it was just respecting this level and it just kept rejecting. Finally, when we got here at beginning of June at 110, it just went crazy. So this is what you need to look at. This is how you chart the long terms. All right, look at the weeklies, chart the long terms, and see where we're going. You don't want to get caught up in the daily trying to just day trade every day because it won't work out for you. And I say that because when you're day trading, you're going to get caught up trying to do 0 DTEs or quick flips, quick pops, and stuff like that. And that could mess up your whole game plan. It can mess up your whole portfolio. If you want to blow your portfolio, try to day trade every day. If you want to blow your portfolio, try to day trade when you're at work and you're on break. No, if you're working a 9 to 5, a salary job, if you have your own business, anything like that, swing trades, long terms are always going to have you protected. If you have time to day trade, yes, day trade, but you know what you should have in the background? You should have your long terms in the background. All right, you should have your long terms in the background. That's how we did it. We abused the month of June. May and June, and we had a lot of big plays just coming out making multiple thousands of dollars. You know what I'm saying? And I'm going to show you guys all that on the Discord tonight when we have the Zoom call. I'm going to put the link in the description right now because right now we're just talking about charting and long terms, using your fibs, charting long terms, markets at all-time highs. There's no reason why anybody should be blowing their account, no reason why anybody should be broke. If you make at least $100 a day, $200 extra a week, you start building that up, you start compounding, next thing you know, you're gonna make $1,000 a week, $2,000 a week, $3,000 a week, and start running it up that way. But you just gotta follow RGO on Instagram. Subscribe to the Discord. I'm also dropping my 4-week mentorship soon. It's only going to have 25 slots open for $250 for 4 weeks. What you're going to get is an ebook. You're going to get your 4-week syllabus. You're going to get the Google Classroom class. And then every class is going to be Tuesday and Thursday at 7 p.m. to 8:30 p.m. starting July 22nd. It's going to be for 4 weeks. You're going to have a final exam. You're going to get a market bullish certificate after completion. And on top of all that, you're going to get a yearly subscription to the Discord. So it's only going to be 25 slots. Be on the lookout in between Monday and Tuesday for the link to sign up to be out there. I'm going to put it on everything. So don't miss out on what we got going. Don't miss out on making this money for the summer. Do not miss out on these big moves. Please. A lot of you guys did not get in at the bottom. That's okay. Right now, you may think we're at the top, but we're going to go higher. And then guess what? When we do top out and we start dropping, we're going to trade the market on the way down. You know why? Because whether the market is up or down, we see green.